Hi guys, welcome back. Today we'll be taking a look at some of the Hong Kong stocks. Before we begin, remember to take a second to give the video a like and subscribe as you greatly help our channel. Without further ado, let's first start off with the Hang Seng Index. So as you can see, the Hang Seng Index is still showing signs of weaknesses, even though we did bounce off this week. Unfortunately, we broke down the cloud support level and when on the way up, the cloud acted as a resistance. And you can clearly see that this blue conversion line here acted as a very strong resistance, and thereafter we see some more selling pressure. So for now, we are still above this 38.2% at 20428. So if we pull back down further, we're going to test the 20,000 psychological support level before 19950 would essentially be the last support before we go back to 19.2k. If we were to break out above this cloud resistance, then it's likely for us to look at this red baseline here at 21332 as its resistance. So next up, let's move on to the Hang Seng Tech Index. So the Hang Seng Tech Index, you can see, is clearly stronger. It's currently still around this 61.8% at 4609. If you pull back down, then we're looking towards 4444 and even 4283 as a potential support. Currently, this cloud is acting as a very good support level. So if we will manage to continue to hold, then that will be a good sign for the Hang Seng Tech Index. That said, this rate baseline at 4764 would act as a strong resistance for the Hang Seng Tech Index to break up. So let's move on to some of its constituents. So we'll first begin with the Tencent. So you can see that Tencent continued to show signs of weaknesses, and we are unable to punch up this first resistance at 341, not even 353 being tested. So this 360 here at this rate baseline is acting as a very strong resistance for Tencent. So it's likely for us to see and retest this 321 support. And if we were to break down further, likely for us to see 310, even potentially 300 to test a $300 psychological support level. Let's move on to Alibaba, or 9988. So as you can see, 9988 is being supported by the cloud. This is further reinforced with the $100 psychological support level at around the 50% Fibonacci support levels. In the event that we do break down next week, then 95.8 and 89.6 would be the next two supports for Alibaba. And if we were to break them all, then we're likely to head back towards $80 as the psychological support level. First resistance to clear will be this blue conversion line at 105. The second resistance to clear will be at this red line at 110. Let's move on to Meituan. So Meituan, not much of a movement. In fact, you can see that it's still consolidating pretty nicely. And we are finding some good cloud support at this area near the 194.1 support level. So if we were to break down that 180 and 170 would be a strong support for Meituan. If we can punch up above 211, then it's likely for us to go back and retest the highs of 242 once again. Let's move on to NetEase. So you can see that NetEase, after its bad news, we found some great support at this 30.2% at 133, essentially almost its last support here, where you can see some buyers stepping in previously. And we did manage to break out above this blue conversion line and even this red-based baseline as well. So it seems like this 148.3 is acted as a very strong resistance, and we did actually cross above it. But unfortunately, this cloud acted as a strong resistance as well. So on the way up, the cloud will act as a resistance, while on the way down, the cloud will act as support. So if we can break out above this 78.6% at 160 levels, that will be a good sign. Then hopefully we can go back to test this 173 levels. Next up, we have NIO. So NIO, not much of a movement for now. You can see that it's still trading sideways, so it's likely for us to hold this 161 unless we break down next week. It's likely for us to see 150 or even potentially 138. On the way down, the cloud will act as a support, so hopefully this will act as a strong support for NIO. In the event that we do break up above these 160 levels once again, then we're likely to retest this resistance at 173 levels. Let's move on to JD.com. So JD, not much of a movement. You can see that it's well supported by this 242 at 61.8%. So if you break down 232 and 222 will act as a strong resistance, a strong support. As for the resistance, it will be 252 to break up. Let's move on to Baidu. So for Baidu, there's not much of a movement as well. It's well supported by this 61.8%, 136. If you break down, then 130 and 123 or around 124 levels will act as a great support. Currently now there is a lot of cloud support at around this level, so hopefully we do not break down further. Next up, we have AIA. So 1299, you can clearly see that we did have a very massive sell-off and a very ugly looking candle. So 61.8% broke down, and we immediately test this 50% at around $79 level. We closed the week just below the $80 psychological support. So unfortunately, it seems like a very bearish sign for AIA or 1299. But this cloud support, hopefully it do hold quite well, and we do not break down this 79. If we were to break down, then 77 and 75 as the next potential support. If we can break up above this strong resistance at around $81 to $82, then that will be a good sign for 1299. Next up, we have PingAn. So PingAn, not much of a movement. It still seems to be very bearish. So it's likely for us to retest the lows of 45.80. If we can break out above this $50 psychological resistance, then that would be good for PingAn. If we start breaking down this 45.80, then it's likely for us to start creating lower lows as well. Lastly, we have Xiaomi Corporation. So Xiaomi Corporation, you can clearly see that we are consolidating sideways, and this 61.8% at 1292 is still holding pretty well. If you can break up, then 1364 and 1454 would likely to be the next resistance for Xiaomi Corporation. Ideally, this cloud resistance, cloud support should not break down. If you were to start breaking down this $12 or even this 1192, then that would be a bearish sign for Xiaomi Corporation. So overall, it seems quite bearish for the overall market, and hopefully we can start breaking up next week unless we start creating new lows, and that would be a bad sign for the Hong Kong market. So if there's any changes, I'll give you guys an update. Thanks for stopping by. Till we meet again, appreciate the manipulation.